everyone, and welcome to the Financial Freedom Podcast. And this week we're going to take a look at Westpac Bank. This is obviously on the New Zealand market. Before I go on and share my screen, remember this is educational purposes only, and I'm going to be talking about the methodology that I use when I look to buy shares. And so if you're looking for personalised advice, this certainly is not what I'm offering. You do need to go and talk to your own financial advisor or planner. So let's jump in and have a look at Westpac. So as you can see here, I have got Westpac on our screen. And I've got both the 15 and 30 week exponential moving averages on the screen. And back here, middle of December, you can see that those moving averages cross, which is a really good positive sign. You can also see since that cross has happened, we have only really had 3 weeks that Westpac has actually declined in value. And if I look down the bottom here, when you look at the volume, and if you looked at Tuesday when I talked about the NZSX 50, you will see that there wasn't a lot of volume on the New Zealand Stock Exchange. But you can see here, especially on the weeks that Westpac has increased in value, you can also see that the volume has been increasing. To me, they are both very, very strong positive signs. Yes, last week we had a very, very slight decline. Okay, and it's hardly even blipped on the radar. In fact, the volume has hardly even shown. Okay, which is great. Now, if I look down here as well, if I look at the average trading range, now for me, when I'm looking at an individual stock, I'm not necessarily looking to see how much too much volatility in this. To me, this average trading range is just an indicator that I use to help me set my stop losses, because at the end of the day, I don't want to be watching the screen every day. I don't want to have emotion attached to any of the shares that I buy. And so by setting a stop loss, it's very mechanical and it will just happen whether I'm in front of the computer or not. So this is a tool that I use. But you can actually see here that we're looking at the moment at about 80 cents movement in any 1 week for Westpac. Okay, obviously that changes. If I go back to this period here, you were looking at about $1.13. Okay, so when was that? That was about the middle of 2022. So it was quite volatile during that period. And you can see that as well, that the shares really fell off, which was obviously the COVID. For those that are observant, you'll also see that I've got another indicator on the bottom of my screen. Now this is the MACD is what it's called. So it's a moving average convergence divergence. And it's a bit of a mouthful, I know, but it is just showing, it really helps me to decide, is this a good share to perhaps look at? Because obviously when I look up here, it's got all the positive signs, okay? The share's trading up, the moving averages are trading up, the 15-week is above the 30-week moving average. So now when I look at the MACD, again, you've got sort of like volume indicators and things down the bottom, and they are showing green, which is positive. You can also see that they're on a positive slope, which is great. And then we've got the moving average lines, okay? And again, they've crossed to the positive and they are flicking up. So I don't spend a lot of time looking at the MACD. Really what I'm looking at, once the share itself has reached all of my positive indicators, I just take a look at the MACD and I want to make sure that that is pointing in the same direction. If it was pointing in the opposite direction, then I wouldn't want to be buying into a share. And a good example is again, way back here in 2022, you can see that we were trading below, everything was trading down, even though the share was trading up. So that's what we mean by having divergence in the market. So that's a time when I wouldn't want to be going in anyway. So that's something that I've looked at. Let's just take these moving averages off and we'll pop on the New Zealand Stock Exchange. And as you can see here, Westpac is on the main board. And what I've popped on is the comparison with the New Zealand Stock Exchange, and immediately takes it to a percentage point. So as you can see here, Westpac is trading above the New Zealand stock market. And the reason they put it into a percentage point is because obviously the overall market is going to have a higher value than perhaps individual shares. So we want to see on a percentage level as to how it is performing relative to the main board. And when I go through and look at the stock selection each week, you'd actually be surprised that more than half half of the New Zealand Stock Exchange at the moment, being the top 50, are actually trading less than the main board. So what you're seeing is only a handful of stocks that are actually helping in the performance of the main board. The most of them are having a laggard. And as you can see here, Westpac is definitely one of them. So for me, I want to also make sure that for the last 5+ weeks, it's been trading above the New Zealand stock market. So there's no way I would have been in through any of this period, even though the stock was moving up. So those are just a few more indicators and things that I use and I look for when I'm starting to buy into a share. And I'll just stop that. So obviously, I will attach that to this, but if you're looking to perhaps receive these indicators that I use, hopefully you can subscribe from this this video today. And I offer a 30-day free trial. So that means for 30 days, I will send out every week the trading signals for that week and any changes to the stop losses and things for any existing shares that we've got within the portfolio. And you're welcome to try this for 30 days, and there's certainly no obligation. And I'd love for you to come along and try it. So I hope that helps. Have a great trading week, and we will come back next week and talk about something else. Take care.